Good morning. This is Larry McMillan with the stock market update on February 22nd before the market opens. So today's the day of all twos, 2/22/22. Not sure what that means. But the market is still under pressure, and the downtrend on the S&P chart is still there. And as a result, we're still holding a core bearish position. You can trade other confirmed buy signals around that, but for right now, you still have a confirmed bearish position. S&P has support in the 42 to 4,300 area. And in fact, last night, the S&P futures traded down to 42.50 before rallying strongly. In fact, we had a holiday here in the U.S., of course, on Monday, and the futures opened Sunday night, traded into Monday, then had a halt, traded again, and they've been wildly swinging back and forth in about a 70 to 80 point range. So expect plenty of volatility still. As far as resistance, S&P should have resistance in the 4,600 area. A move above 4,600 would be bullish and would make, perhaps us change our opinion on the core bearish position. Equity-only put-call ratios are split. Right now, the standard ratio made another new high, so that's bearish for stocks. But the weighted ratio has rolled over in the last 3 or 4 days, and that's given a buy signal. So I'd like to see those two get together before we actually call it a confirmed signal there. But they're both in very oversold territory, and the next signal from both of them will be buy signals, just a matter of when. Breadth has been poor, although not terribly bad. And as a result, both breadth oscillators have descended once again into oversold territory, which sets up a buy signal eventually down the road. The problem here is that this is a very short-term indicator, and the last 3 attempts at buy signals have not worked out too well. So this is certainly a setup for a longer-term buy, but it's just not been able to find its footing so far. New highs versus new lows, we're just seeing new lows swamping in every day at hundreds of stocks are making new lows. I realize a lot of them are the same stocks, but they count again newly each day. And so this indicator remains quite negative for the overall stock market. As far as VIX goes, things are deteriorating there in one sense, but one positive sense is that there was a VIX spike peak buy signal the other day, and it's still in effect. The more negative things, though, are that the trend of VIX is higher. That is, VIX and its 20-day moving average are both above the 200-day moving average. And perhaps even worse, the term structure of the VIX futures is rolling over into a negative status, a downward sloping status. So right now, March, which is the front month VIX future, is trading $1 above April, which is the second month VIX future. And that's a negative sign for stocks, usually an immediate negative sign if it closes there. It didn't close there on Friday. We'll see what happens today. So overall, this is still a pretty negative picture. The trend of S&P is higher. The trend of VIX, the trend of S&P is lower. The trend of VIX is higher. And those are two things that are bearish for stocks. So as long as they're in effect, we're going to maintain a core bearish attitude, and we will trade confirmed other buy signals around that. So thanks for listening. Visit our website. Take a look at our newsletters. We have a lot of free trials always, and you can keep up to date on these indicators daily. Have a good week trading.